On November 17th, the Nasdaq closed below its 50-day moving average for the first time in nearly 7 months. Now, many analysts see this as a potential sign of future weakness. But fundamentally, what has really changed? Well, the shift began on October 29th when Chairman Powell cast some doubt on the idea that the Fed was early in a long-term easing cycle. Now, before that meeting, the CME Group's FedWatch tool showed a more than 90% chance of a rate cut at the December 10th meeting. That probability has now dropped below 50%, with the market currently pricing in roughly 75 basis points only of additional easing between now and the end of 2026. Now, there's also the ongoing question of the AI bubble. Some analysts argue that the strong AI-driven rally has created structural vulnerabilities, suggesting a meaningful pullback could be reasonable and in order. They often highlight that the Nasdaq was nearly 16% above its 200-day moving average at the October 30th high. That level had only been seen once in the last 5 years, July of 2024, which was followed by a 16% correction that eventually found support at that 200-day moving average. Even in February of 2025, the index was only 10% above the average, and that was right before Liberation Day's 26% plunge. So now attention turns to the NVIDIA earnings scheduled for release after the bell on November 19th. One of the more intriguing scenarios would be a strong earnings beat, followed by the stock trading lower. Now, some may view that as another sign of broader market vulnerability. So if a trader believes that the Nasdaq will head lower from here, they could express that by selling the December micro Nasdaq 100 contract at 24,525 and target a move to the September lows of 23,100. Now, a stop for this trade could be placed above at 25,400. This trade can make $2,850 if the target is reached and risks $1,750 if you're stopped out of your level. Now, if a trader believes that the Nasdaq will bounce from here, they could buy the December micro Nasdaq 100 contract at 24,525 and target a move to the psychological level of 25,000. Now, a stop for this trade could be placed below at 24,100. This trade can make $950 if the target is reached and risks $850 if you're stopped out of your level.